If you just received an IRS letter called a CP503, this is your warning sign. It's more serious than the earlier notices, the CP14 or the CP501, but you still have time to fix this before the IRS has the authority to levy or garnish you. In this video, I'll explain what a CP503 notice means, why you received it, and what you should do right now to stop things from getting worse. Hi, I'm Bob Jablonski, an enrolled agent and certified tax resolution specialist. I help taxpayers nationwide deal with IRS notices, stop collections, and resolve tax debt. And I will explain this letter in plain English so you know exactly where you stand. So, what exactly is the CP503 notice? Well, it's an urgent reminder notice from the IRS. It usually means you have a balance due. The IRS has already sent you earlier notices, such as the CP14 and CP501, and the IRS hasn't received payment or heard from you. It's basically them saying, this is getting serious, we still haven't heard from you, and we need to hear from you. So what happens if you ignore a CP503? Well, this is the part you need to understand. If you ignore a CP503, the IRS typically moves to the next notice in the cycle, which is the CP504. And that notice warns you about intent to levy. They can't actually levy or garnish paychecks or bank accounts at that point, but they're warning you of it. They can take your state tax refund at that point, and they let you know they do have the right to levy something, which is a state tax refund. It also signals that your case is moving closer to enforcement. And after that notice goes out, the IRS may issue a final notice of intent to levy. When they do that, you have strict deadlines. If you don't meet them or you don't request certain appeal rights that are also under strict deadlines, then the IRS can start to levy you. So before you panic, I would recommend step one, you confirm the IRS balance is accurate. I see inflated balances all the time because payments weren't credited, or the IRS filed a substitute for return on behalf of the taxpayer, or maybe a CP2000 adjustment was made that increased the tax. The taxpayer missed it, and it really isn't legitimate. They do not owe that much in tax. On the other hand, sometimes taxpayers are just surprised at how much it's increased because of penalties and interest that really stack up quickly. So check the tax year listed on your tax return and match it to your records before you do anything else. It's really helpful to have a tax transcript to do that. So step two is take some action. Once you confirm the balance is correct, you usually have an option or a number of options, especially at the CP503 stage. Well, maybe you can pay the tax in full. That's a good idea if you can, because if you owe it, you can, because penalties and interest will stop accruing. Maybe you want to set up an installment agreement, and there's a variety of installment agreements. The IRS will want you to get into it at a certain dollar amount, or perhaps you could show that you can't pay that amount and you can get into something like a partial pay installment agreement. Maybe you want to explore an offer in compromise or a settlement with the government. To get into any of these two things, an installment agreement or an offer, you're going to have to make sure you filed all missing tax returns. So make sure you get that done first. You may want to request penalty abatement if you qualify. And then if you truly can't pay based on the IRS's own criteria, you might want to explore hardship options. So what are some common mistakes that you want to avoid? Here are some mistakes I see all the time with a CP503 notice. The taxpayer ignores the letter because it's just another reminder. Well, unfortunately, that's not going to get you anywhere because it's just going to keep escalating up the process. Maybe they'll call the IRS and they'll agree to a payment plan that they can't afford. Once again, not a good idea, because once they default on that payment plan, they're right back in the circle again. Only this time with the IRS looking at them maybe a little more skeptically. They're going to try to set up a payment plan when they have missing tax returns. Well, the IRS won't let you do that. So you're going to get on a phone, you're going to waste some time, and then you're probably going to have a deadline as to getting that tax return filed, which is going to create more stress and more pressure. And then some taxpayers, they get into the payment plan's okay, they're able to maintain it, but then they get in trouble with another year. They're under withheld or they skip estimated tax payments. And that blows up the whole situation. They have to start over again. So let's sum it up. A CP503 is an urgent reminder. Although it's not the final notice, you're now in the middle of the sequence and things are starting to get worse. As I mentioned, it means the IRS is escalating your case. They're taking it on to the next steps and you're getting closer to levy territory. You do still have time to stop things from getting worse. This is the time to get on it. And the earlier you act gives you more options and less stress. The worst move you can possibly do is doing nothing because you are just going to continue going through that escalation process. If you receive the CP503 and you're not sure what your best move is, you can schedule a free consultation with me at Jablonski Tax Relief and talk to me directly by calling 972-821-1991 and asking to get on the schedule, or go to the description below, click the link, and get directly on my calendar at a time that's convenient for you. Like this video, subscribe for more IRS notice explanations. Let me know in the comments below, what IRS tax problem topics do you want me to cover?